Hi, everybody. Welcome to the Patty Brennan Show. Whether you have $20 or $20 million, this show is for those of you who want to protect, grow, and use your assets to live your very best lives. Today's series is about long-term care, and yet it's not. It's also about short-term care. Because here's the thing that I've really learned is that eventually we're all going to need help. And so I've recently decided to set up a separate resource center here at Key Financial so that our clients know they can come to us with whatever might be happening in their physical or financial lives, and we're here to help. We're going to have this resource center to be able to guide them in terms of what the options are. And the reason I'm doing that is because in our own life, my husband just had foot surgery. And he didn't need long-term care. We needed short-term care. And I got to tell you guys, I'm a little embarrassed to tell you this, but we were not ready because it's not one of those things you want to think about. And yet, when he had his surgery, he came home and I'm thinking, wow, we don't have a ramp. How's he going to get into the house? So I had to call two neighbors and we managed to get him up the 2 steps because he wasn't allowed to bear weight. How's he going to get a shower? We got to get those grab bars. Do they even work? He's a big guy. He's going to pull it right off. So there are things to think about that, frankly, we didn't think about. So learn from my mistake, and we're going to set up this resource center. So bottom line to this is I just want to be able to have the answers because, that's what you need. It's not something that you want to think about in advance, but it is important too because you don't want to be scrambling if something unforeseen happened, a car accident, for example. It doesn't have to be a long-term illness, an elderly person. Things do happen. Let's just be ready. So we think about long-term care and of course, a lot of people come to us and say, well, what about long-term care insurance? Or does Medicare cover this stuff? Well, the answer to that is no. Medicare doesn't cover most long-term care needs. There is insurance, and, the question is first of all, do you need it? How much does it cost? Can you self-insure? What are our options? Is there an intermediate step? For example, is it black and white? Either you have it or you don't. Maybe you have certain types of insurance that you don't really need anymore. So you can do something called a 1035 exchange and move it from, say, for example, a life insurance policy and instead convert it to a long-term care policy, tax-free. So there are options. It's just important for you to know what they are and also know what to look out for. So whether it be short-term need or long-term need, let's understand in advance what your options could be, whether it be in the community that doesn't necessarily have to cost you a lot of money or, something where insurance could kick in for you. So I think the only other thing that I'm going to add on this is an area that's constantly changing. That's why it's so difficult for so many people because there's always something new that's popping up. That's why I kind of had to make that decision to create this resource center because we've got to stay on our game. We stay on our game in so many other areas. Why not do it in this too? We're staying on top of tax laws. We're staying on top of portfolios and the economy and the newest and latest great retirement planning options to create streams of income that people will never outlive. We're doing that stuff anyway. Why not do this? Now we are. So in the meantime, the first thing is, do you need it? As I said before, a lot of people can self-insure because insurance costs money. And, this is one of those things where you might want to say, well, I'll cross that bridge if and when I come to it. We'll use our existing money to pay for it. I have told this story before. You've probably heard it, but I had a wonderful client many years ago who had a long-term care policy. We were doing her initial financial plan, and I said to her, Kathy, you've got this long-term care insurance. You've accrued assets to the point where you probably don't need it. If you needed care, you have plenty of money to be able to pay for it. And she said something I'll never forget. She said, Patty, I really appreciate that, but here's the way I look at it. If I can afford the cost of the, assisted living facility or the long-term care facility, I can also afford the insurance. And if I did need the care, I would much rather have John Hancock pay for it instead of my kids, because I want my kids to get whatever's left. And I thought that was a brilliant insight. So she decided to do the risk transfer thing, which frankly is all insurance is. Instead of assuming all of the risk herself, she's going to transfer it to an insurance company. If it happens, they get to cover it, not her. And so the first question is, can you self-insure? If it happened, would it put you and or your spouse in financial jeopardy? That's kind of important to know. Doesn't mean that you're going to go out and get insurance. It's just get an understanding of the impact of that, especially as we covered the different options that might be available. Long-term care insurance covers, 6 activities of daily living, bathing, dressing, transferring, eating, and continence. I've had 4 kids. I've already failed that last one, but too much information, I think. But anyway, not to worry. I'm not a long-term care. I'm not going for long-term care. But the second one, and the most important thing for most people, are cognitive impairments, because that's really a tough one to navigate, because most people don't fall off a cliff and all of a sudden forget everything. People tend to have good days and bad days. And I will tell you, we're often the ones that are noticing it first because we're getting the phone calls. People are forgetting stuff. It allows us to really ask the questions and determine whether or not they're still okay, whether or not they can continue to care for themselves. It's really important because a lot of damage can be done. So we've got activities, daily living, cognitive impairment. So the key here is to figure out what's available in your community in terms of different facilities. Continuing care communities are in every community now, and they are retirement, but also they will take care of you and be available in the different seasons of your retirement life. They tend to be pretty expensive. Some require big lump sums up front. Others are pay-as-you-go, like a rent. I think the most important thing as it relates to those facilities is the culture. Do you have friends that have also gone into them? Because that's really important. Is it in your community so that you can continue to go to Mass and go to church? So those things are really key here. When it comes to different types of coverages, a question we often get is, well, gee, what about Medicare and Medicaid? Medicare does not cover long-term care, okay? That's first and foremost, after 20 days. Medicaid is kind of interesting. A lot of people don't ever want to go into a Medicaid facility. We get that a lot, especially from adult children who don't want to put their parents into a Medicaid facility because, again, we have an image of what that might be like. So let me be the first to tell you guys, those facilities are pretty darn good. I will tell you right here in Chester County, we have one, and I got to tell you that they provide terrific care. Here's why. They don't have the turnover that a lot of these facilities have because they're government workers. They have a pension, they've got great benefits, and they tend to stay. So you've got the continuity of care. So before we go into this, assuming something, check it out. You might be pleasantly surprised. So we've talked about the different options. We've talked about the resource center. What if you want to go the insurance route? There are so many things to consider with long-term care insurance. So first of all, what exactly do you want it to cover? Home care, daycare, assisted living, nursing home, the different options that might be available in your community. That's really important. Do you want a reimbursement plan or something called an indemnity plan? A reimbursement plan, basically you or someone has to submit the bills and then you get reimbursed for the cost. An indemnity plan is kind of interesting and they're becoming more popular. I kind of like these. There's no paperwork. It's administratively so much easier. And as long as you satisfy those 2 of 6 ADLs, you're going to get that monthly benefit to use as it is needed. It could be used to do something around the house, get the grab bars or put the ramp in, or it could be used to pay a family member to come in and help you from time to time. So indemnity plans are very interesting. Now, Premiums of long-term care, depending on your age, are tax deductible. The key between the two types of plans is there is a limit on the indemnity plans in terms of how much coverage you get to take as a tax deduction. So right now it's $420 a day would be the max that you can, the premium can cover, or whatever you're actually paying. And in that case, if you're audited, you'd have to prove that you deserve to take the deduction. I think when it comes to long-term care, one of the things that's really caught people by surprise is many of the reimbursement plans, many of the plans that were, put into place 5 years or longer. On page 67, there's a little sentence that says, oh, by the way, we can raise your premiums if we need to. Well, guess what? It almost doesn't matter who the carrier is. They all have done it. And when I talk about raising the premiums, they're not increasing them by inflation. I will tell you, Ed and I have long-term care, and even I was shocked at how much they increased our premiums, like 162% in 1 year, because they were making up for lost time. So be aware of that when you go into these things. Now there are alternatives where they cannot change the rules of the game. They can't increase the premiums or decrease the benefits. And that's what's happening with a lot of existing clients. And you might have seen this as well, where you're getting these nasty grams in the mail saying, oh, by the way, we are increasing your premium by 100%. You have a choice. You can pay this new premium or you can cut your benefits. And here's a choice. You can cut it here. You can do this. You can cut the number of years that we'll pay if you need the care. We can cut the amount. We can remove the inflation rider. And so they've got this kind of myriad of options, and you got to figure it out. And most of the options are obviously not in your best interest, but there's typically one that does favor the client. So if that's your situation, that's where call the agent, call the person who introduced the company to you to figure out what's going to make sense given your current situation. Because again, you probably got that policy 10 years or longer, and your financial situation may be different today. So that's first and foremost. Secondly, what's the quality of the insurance company? Part of the issue that's happening is some of these insurance companies are in trouble. They can't just arbitrarily bump up your premiums. They have to justify it in every state in which they do business. So in our example, this company had to go to the Pennsylvania Insurance Commissioner and say, we priced Patty and Ed's policy wrong. And by the way, it's not just Patty and Ed. They have to do the same thing across all their policyholders. They can't play favorites. So they had to justify that to the insurance commissioner. And by the way, they did, because the insurance commissioner does not want this company to fail, because then that's a real problem. So how solid is the insurance company that you're considering? If this were a situation where you say, I'm bagging that, I'm not doing that option, I'm going to self-insure, then the question is, how would you cover that? And what is the implication for the surviving spouse? I can tell you personally, when my dad needed long-term care, even I was surprised at how quickly my parents were running out of money. And my mom was only 66 years old, and she was perfectly healthy. And she ended up living until she was 83. And I got to tell you, that was tough to make what she had remaining last for the rest of her life. It was really tight. And that was no way for my mom to have to live. I didn't want her to feel that anxiety and that worry when she was 80 years old. So again, whatever option you choose, it's phenomenal. Just try to anticipate it, run the numbers, and figure out what makes sense in your situation. So we talked about some of the tax issues. I think that the other thing is this hybrid approach, okay? Is there kind of a intermediate step? And the answer is yes. For example, there are life insurance policies that now can turn on the death benefit if you need long-term care. That might be a great option because a lot of people don't need their life insurance when they're 80 years old, but they do need care while they're still alive. Same thing with annuities. You can get annuities that provide an option for long-term care. And basically all you're doing is you're providing some leverage. You put in $100,000, it's great. It's there if you want to take it back out again and you're perfectly healthy. Or if you need long-term care, you've got $300,000 of long-term care coverage. Now, that's just an example of that kind of leverage effect. But it's it's a nice option because, let's face it, there's basically three things that happen when you're looking into this, right? You live and you want to spend it. You die, they have a death benefit that's usually more than what you put in. And if you need long-term care, you've got a tax-free stream of income to cover the long-term care needs. So to me, that's heads you win, tails you break even. So again, to summarize, just understand that this is something you probably don't want to think about, and I totally get it, but you also don't want to be scrambling in the midst of a real healthcare crisis. So let's just deal with it. Understand that there are resources in our community. Know what they are. If you have the time and have the inclination, or if, God forbid, somebody does get some sort of a diagnosis, don't wait. Please don't wait. Talk to your advisor. Talk to your doctor. Go out and figure out what your options are. And just know there are options, there are resources. And as it comes to the coverage, the insurance, just be careful. Just be very careful. Understand what you're getting into and make sure that it is designed to do what you want it and need it to do. So this particular Ask Patty Brennan series was a little bit longer than normal. I usually like to keep it 5 to 10 minutes, but as you can probably tell, there is an awful lot to this issue, and it's going to be different for every single one of you. So please reach out to us. Go to keyfinancialinc.com, get in contact with us, ask us these questions. This is what we do. This is why we exist, to make your life easier, to take away some of the anxiety and the uncertainty that is inherent in everyone's life. Because unfortunately, we're all going to go through it at some time. So let the people who already have gone through it help. Thank you so much for joining me today. I hope you have a great day and you stay healthy. Take care.